Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Wednesday the 17th of the 3rd, 2021. Time is 0450 GMT. Asian session coming to a close, European session firing up, and our lunchtime is the North American US session. Right, yesterday then, Tuesday the 16th, we had a positive opposed driver in the yen at plus 106, front and back door flows, coming out of the euro at minus 90, the pound at minus 18, and the dollar was the positive rock at plus 2, activity plus or minus 108. Right, intra-week then, this is from Monday the 15th open to about 15 minutes ago. We've got a negative opposed driver in the euro at minus 105, front and back door flows, the opposing positive flows mainly going into the dollar at plus 84, next into the yen at plus 61, and the pound was the negative rock at minus 40, activity plus or minus 145. Intraday then, this is what's happened in the Asian session to about 15 minutes ago. We've got an unopposed negative driver in the yen at minus 29, no backdoor flows this time, and we've got the opposing positive flows going mainly into the dollar plus 12, pound plus 10, and the euro plus 7. And that's on activity of plus or minus 29. Right, what's going to knock it about then? Well, it's Fed day today, as you know. Wednesday's Fed day. Yesterday we had soft US retail sales, which sort of took a bit of starch out of the shorting the pound dollar. It still was soft, but it didn't really get to where we thought it would. So today we've got the Fed rates decision, we've got the CAD consumer price index, and the NZD GDP. That's the important one, the NZD GDP. Right, Thursday then you've got the Bank of England rates decision, and Friday you've got the JPY rates decision. So we've got 3 rates decision, bang bang bang, this week. Right, so let's clear this off and have a look what's been happening in the wider market. Our trades have recovered a little bit. We're about 720 points up now, from a peak of 1150 and a floor of about, recently obviously, 500 points. So they come up about 200 points from the low. Anyway, Euro complex, this is the big complex, 7 pairs. Euro is strong except against the dollar, which is stronger. The yen is weak except against the AUD and the Swiss franc. The pound is strong except against the euro and the dollar. The Swiss is weak except against the AUD, which is weaker. The CAD is weak except against the yen, the Swiss, and the AUD. So it's pretty mixed, the CAD. The AUD is weak across the board. The NZD is strong except against the euro, the pound, and the dollar. And the dollar itself is strong across the board. So what have we got then? We've got where are we? We've got AUD weakness this morning, and dollar strength, and take your pick in the middle. Right, so let's get rid of this, and let's have a look at the wider asset classes. So just get this rubbed off. Right, so first one we tend to look at is, so we've got the dollar index, Right, dollar index basically looks like this. It went through the resistance, new highs. Now it's back to roughly there. So you've got this situation. It's back. It's back at the previous resistance. Gold. Right, gold has been coming off, as you know, and it is now come back a bit. It's about 0.3 off our modelled floor. Oil's been sort of doing this situation, and it's about, excuse me, I was going to sneeze but I didn't. Chalk dust. Right, there. So oil's about there. Right, what else have we got? We've got Wall Street. Now Wall Street looks pretty much like this. It's come back a little bit, so it's about there. It's broken through. The S&P is pretty much at the previous resistance, and the tech looks basically like this. It's about half marks, 0.5 from its previous high. Right, US 10-year bond and the bund. Now the 10-year basically is on the deck in terms of, these are prices, so the yields are high. So we've got strong US yields at the moment. The bund has come up a bit. It's about 0.4 off the floor. So US yields relatively higher than European yields at the moment. Right, just make some space here, and then we've got copper. Here we are. Copper. Remember we had the 1, 2, 3, 4, 5 pumps on that. Came back there, and then came back more or less to base camp. And it's now operating pretty much back at the second pump now. So that's where copper is. US steel had this W-shaped recovery, and it's now 0.4 from the high in our modern terms. From high, right? So that's where we are in the asset classes. Right. So what are the key things to look out for? Well, as I said, we're sticking with our positions. Let's have a look. So what are we doing? Well, we're long AUD dollar. We're short NZD. In the euro, the pound, the CAD, and the AUD. So we're long euro, NZD, long pound, NZD, etc. Right. So and we're about I don't know, plus 720 points profit at the moment. Right. We're sticking with those positions. The key thing for us is going to be the New Zealand. Where is it? Let's grab this. Wrong sheet. The New Zealand GDP. Yeah, the New Zealand. It wasn't the wrong sheet. I just grabbed the wrong one again. The New Zealand GDP later today, but it will be overshadowed by the Fed, obviously. But going forward, it will be quite important because the New Zealand dollar complex is operating at about 67% from the model floor. It's only the Swiss which is at 70%, which is higher. And so basically the New Zealand dollar has already had the pump and is likely to, and the data cycle, if you look at the data cycle, the New Zealand dollar data cycle doesn't reflect this at all. It's being hyped by the analysts constantly, but it's running out of steam. So we expect these positions to improve. China's going to be kicking in. If you look at the flows, where is it? The daily flows. You've got an unopposed negative driver in the yen. That's that's likely to be gearing up for further yen weakness. So we're likely to see they're just waiting for this Fed thing to get out of the way before really ramping equities and risk on. So that's our take. Probably stay out of the minor proceedings at the moment, but we're sticking with those core positions. So I hope that was useful. See you for the daily briefing tomorrow. Thank you very much.